Well, here we are back on the Firestone Williams Report. Mr. Williams, how are you today?
I'm good, except for the heat.
Oh, come on, we can't complain. We got 8 months of winter and 110 days of summer.
The thing is with the winter, though, is that, remember, I'm the winter sports guy, and I had about 8 weeks of winter this year, so it's not necessarily a good thing.
Yeah. Was there any snow?
Not really.
No.
There was some ice, some rain.
Okay, all right. Now, Scott, rumor has it that you do a pretty good Christy the Clown interpretation. Can you do a 10 seconds of Christy?
I'm a bit of a Simpsons fan, yes.
Yeah.
So let's put this in the realm of business, all right? So here we go. Let's talk about the Firestone Williams Report as Krusty the Clown.
All right. Remember, when you're doing a party, always use Firestone Williams brand balloons. Because if you don't, one could go off and take out every eye of every kid in the room. You know how much that would cost us? Bruce, how much did that cost us?
I don't know, Scott, or Krusty. How much?
There you go.
All right, that was good. Okay. You can tell we're very serious on the Firestone Williams Report. It's all about business. It's all about giving back to society. It's all about entrepreneurship and entrepreneurship, right?
Absolutely.
Okay. So we have with us today a special guest, Scott DeVries is here from DeVries Financial. Welcome, Scott.
Thank you. Glad to be here.
And, rumor has it, Scott, that you've been known to, have dinners from time to time at the Reno Club and talk to folks and tell them all about what DeVries Wealth Management does. So for the listeners who are listening today and who will listen on Blog Talk Radio, tell us a little bit more about what you do.
Well, we work with clients in kind of the areas of financial planning. What we try and do is provide a uniqueness or investment opportunities that perhaps they're not getting from some of the traditional advisors.
Right. Well, listen, one of the problems I know my sister has, for example, is that on all of her savings, she gets a grand total of anywhere from 0.7% to 1.7% return. So if she's got $1,000 invested somewhere, she gets like $7 of interest, maybe $10 of interest in a year. That's not very good, is it, Scott?
Well, that millions of Canadians, unfortunately, are facing those challenges. We've got equity markets right now that have so much uncertainty that we just really don't know what may happen. Challenges in Europe, they continue on. So equity markets, really, since the turn of the century, have just not performed. You've got yields on GICs that are next to nothing, and so what do you do?
I don't know. What do people do? I mean, I know you've got DeVries Wealth Management. You've got a lot of clients there that you turn to, they come to you and they say, look, I've got $10,000, $100,000, $1 million saved up, but I'm getting 0.7%. I think I mentioned to you guys last night when we had dinner together that even all those smart people at Google and all those incredibly smart people at Apple who have, $40 billion, $60 billion of cash on their balance sheet, their money market funds are returning 0.7%. And they're really smart people. So what are people going to do today?
Well, we're fortunate enough to have Jawad Rathore here. He's going to join us very shortly.
I think he's here now. Good morning, Jawad.
Good morning.
All right, you're live to Blog Talk Radio, Firestone Williams Report, and you're also late.
I am indeed. My apologies for that. My cabbie took a wrong turn.
Blame somebody else, Jawad. All right, so I just want to just interrupt you for a moment there, Scott. So Jawad Rathore from Fortress Real Capital has just joined us, originally from Toronto. But you've kind of spread out all across the country now, Jawad.
We have, absolutely. We are coast to coast and doing great projects right around the whole country.
Okay, now one of the provinces that you told me about some months ago that you are actively invested in and working in is, I think, Saskatchewan, right?
Indeed it is.
And Saskatchewan, not everybody in Canada thinks, okay, that's the best place or a great place to invest, but I think you do.
Yeah, you know what? What we do at Fortress Strategic Developments, which is the development arm of the company, and Fortress Real Capital is the capital raising arm. What we do is look for good opportunities, and I'll tell you what, Bruce, they come in all different shapes and sizes, and we do a ton of research, and we were doing a lot of this, and all the arrows kept pointing to Saskatchewan, and with specificity South Saskatchewan, and with a little bit more locality to Regina. And there's some numbers that really kind of jump out and kind of jump off the page there. The real GDP in Saskatchewan is number one in the province. I mean, it's number two, which is Ontario. We always think of ourselves as this great powerhouse. We're almost half of what Saskatchewan is in terms of per capita real GDP.
No way.
Median income in Regina is over $100,000 a year.
I'm moving. How about you, Scott?
Let's pack up and go.
Does a lot of that have to do now with the oil industry that's starting to?
It's got everything to do with resources. Everything to resources.
Yeah.
70% of the world's potash comes from southern Saskatchewan. That's 70% of the world's uranium comes from southern Saskatchewan. The biggest buyer globally of those two items, potash and uranium, little country called China. So if you're looking at your potential customer list, that's a pretty good place to start. You've got the Bakken Oil Reserve, which is being drilled now in southern Saskatchewan. This thing is so big, it extends into Montana, both of the Dakotas. So far, the confirmed findings in that reserve is almost 3 times the size of all the oil in the Kingdom of Saudi Arabia.
You know, I think, Jawad, that Canada, I mean, I'm not just saying it myself, and the research says that Canada, I think, will be, if not the top oil producer, one of the top 3 within a decade.
Absolutely.
Is that the kind of, now, out there, where in South Saskatchewan are you guys?
So we're right in the heart of Regina, and you've got all this resource stuff that's driving it. But the problem is there's nowhere for people to live. Regina right now is expecting 4,000 people to come in the next year. They have a record start for housing, and that's only 1,700 units.
When I think about Regina, I think about, flat treeless plain. I think about, a bungalow, a high ranch style building, or maybe a 2-story home. But that's not kind of what Fortress is investing in.
No, it's not. And when we first looked at, listen, I'll be honest, we carried a lot of the same, sort of preconceptions as well. Go to Regina and watch your dog run away for half an hour because, it's just flat and, there he is, it kind of keeps going.
Yeah.
So we looked out there, and a couple things that jumped out at us was the vacancy rate was below 1%. People were living in hotels. The average daily occupancy rate of hotels up there is over 80%. Any hotelier will tell you 50%, and they're happy and they're making money. So people are living in hotels because there's nowhere to live. We looked at the homes out there, Bruce, as you mentioned. Homes that were 5 years and older were selling on average for about $270,000 each. Now that's up from $200,000 a door about 5-10 years earlier. So old inventory was up almost 35%. New homes, new products were selling on average for $450,000 each.
Wow.
So you've got the older stuff at $270,000, which is a record surge, and the new stuff at $450,000. Looked at those numbers, we said, wait a second, where's the disparity? Now, when you look at older homes in Regina, these are pre-war homes. And I don't mean the Gulf War. Like, this is where aluminum siding goes to die. So, it's not quality stuff. It's not particularly, visually, it's not very aesthetically pleasing. And you've got all these people going in there now, and what they're all looking for, what they need, is somewhere to live. Rents in Regina are through the roof. A small, 800 square foot apartment in the not so great part of Regina is going to rent for $1,200 to $1,400 a month. There's fully furnished executive suites, 1,400 square feet, fully furnished executive suites, right on Rose and right in downtown Regina, that rent on average for $4,500 to $5,500 a month.
Through New York prices.
Depending on when you have 1 or 2 parking stalls, exactly, because there's just nowhere. There's
the
just
comparable
nothing.
for Ottawa would be, between $3,000 and $3,500 a month. So Ottawa, Ottawa has a population of 1.3 million. Executive travel apartment would be about $3,500 a month. So roughly $100 a day. So, Jawad, you're going vertical there. Can you tell us a project, give us an example of a project that Fortress Development and Fortress Real Capital has invested in out there, and then we're going to talk about Ottawa.
Sure, yeah. So out there, we are doing a project in conjunction with Brightstar and Westgate that is called Capital Point, and it is the crown jewel of Regina. It is the tallest project in the entire province. It's a residential tower. It's a 26-story point tower.
Surely when you went to the town council, the mayor out there, and said, we're going to build a 26-story building in Regina. What did they say? Did they say no?
Well, it's actually funny. I have never seen a town council that is as pro-development as the wonderful people we've worked with in Regina. They are pushing development tremendously. I'll give you an example of that. Not only did they not give us any height restriction or really any commentary to that effect, they waived all of our development fees. So they said, we want you in here building, we're not going to charge you to do it, and that's a huge plus. I'll tell you one of their great incentives. They need, not want, they need housing in downtown Regina so much that because we're in a designated high-density intensification zone, they offered a very unique municipal incentive. Anyone who buys a condo in Capitol Point will pay no property taxes for 5 years after they take occupancy. Now, when you factor in, your borrowing costs, your living expenses, and your cost of housing, property taxes is pretty significant. And we're talking about a city that's growing and needs infrastructure. You're thinking those taxes are probably going to be high and get a little bit higher as well. So what we're looking at here is the city is saying no property taxes. If you buy and you move into this community, we want you downtown. We'll exempt you from paying property taxes for the first 5 years. And that's totally transferable. That's attached to that project itself. So if you're there for 2 years and you sell it, the person who's buying it, they're getting the next 3 years off the tax.
That's fantastic. Now, tell us exactly what the role is of the two fortress companies, okay, Jawad? Not just in Regina, not just in Toronto and Ottawa. What other markets are you involved in? And then tell us what the role you play.
Sure. So we're in Toronto. We're in the Greater Toronto area. We're in Ottawa. We're in Regina. We're in Calgary. We're looking to roll some new projects in Edmonton. We're underwriting projects in Salmon Arm, BC right now. We're looking at a couple exciting projects in Winnipeg. So we are coast to coast. So Fortress Strategic Development is our development company, and what they do is at Fortress we do all the research, we do all the analytics, we've got stakeholder management people, we run the performance, we do the research, we do the cost verification, we work with the engineers, we basically do everything to take the idea from concept and bring it into reality, and basically create that roadmap of not just the financial requirement, but also what is needed from a marketing research point of view, what's needed from an absorption point of view. So that's all the research and background and analytics that Fortress does as a development company. Fortress Real Capital is then the vehicle, the investment product that is used to raise the capital, which is available to retail consumers in right across Ontario, and some of our projects are available in other provinces as well. And that's an investment product where people can then invest into a Fortress development project. So it's a really exciting tandem of kind of bringing the intellectual capital of Fortress Developments, and then with Fortress Capital bringing the financial wherewithal along as well.
Well, okay. Now we've talked all across the country now, a little bit about what you guys are doing, and we're going to get back to Scott. I haven't forgotten about you, and we're going to talk about some of the young people who've joined us as well. But Jawad, here in Ottawa, Ottawa's known as a place that's, I think Roger Staubach said when he came here, Staubach and company came here, said this is going to be one of the toughest places to do business in, to get planning approvals in, right up there with Boston, Portland, Seattle. You mentioned a few other names, right up there in the top 5 most difficult places. But you've had quite a different experience, I think, with the city of Ottawa.
Yeah, we've had a great experience here, and hats off to your Mayor Jim Watson and his team over there. I mean, I'll tell you, it's great to talk to politicians that really get development, get design, and incorporate that into their city planning. So we've got 2 projects here in Ottawa. They're both in partnership with land development and real estate impresario.
So that would be Brad Lamb?
That is Brad Lamb. The Condo King is how he's often referred to. He doesn't like that, so
okay. Well, sorry, Brad.
Nickname, but he'll live with it. I mean, listen, you sell $7 billion of condos over 20 years, you're going to get called the Condo King or Emperor or whatever it is. So Brad's had a lot of success in Ottawa. He's done a couple of projects here. He did the Mondrian, he did the East Market, and then he came to us. We'd already done a couple of projects in Toronto together. And he said, you know what do you think about going to Ottawa? And I said, well, let's go do some research on it. And everything we saw pointed to a stable market, a consistent market. You've got, a relatively, compared to other areas of Canada, very highly educated market. You've got a lot of growth and stability in there. So we liked it as well. So we've got 2 projects right now. The first is called Gotham, which is at the corner of Gloucester and Lyon. And the other one's called Soba, which is on Catherine Street, just south of Bank. And we started with Gotham, and I'll tell you, it's just been a runaway success. We started last summer. We are completely sold out on our pre-sale release.
How many units was that?
So it's over 200 units. That's over 200 units.
That's big for Ottawa.
So, okay, I have a question about real estate here in Ottawa, because I think we look at Ottawa.
You're an expert, right, Scott, in real estate?
Yeah.
Yeah. Scott is our marketing, we call him the evil marketing genius from my barrel. I mean it, the evil part.
Okay,
yeah,
perfect.
The genius part, no.
Genius part,
the evil part,
sure.
definitely.
Yeah.
But no, here's one of the things that makes me scratch my head in Ottawa, is that we look at Ottawa as primarily, people refer to it as the government town. The high-tech sector, as much as we saw that, the huge boom back in the late 90s, we all know what happened to that. We now refer to the business park in Canada where the land where dreams go to die.
Really?
Oh, absolutely. And but the thing is that, we see, like, the joke in Ottawa is that, oh, look, they're tearing up the pavement in a parking lot. Must be another condo. And the thing that I have to ask, and you guys as the experts here, where are these people coming from? Like, what is actually the cause of so many units going in? Like,
can I answer that?
Sure.
Well, wait a second. We have guests here that are supposed to answer, but I will jump in, and then I'm going to turn to Jawad, let him.
Because I want to know where these people are coming from.
I'll tell you. My wife and I, owned a 7-bedroom house in Canada Lakes on the golf course. And then my son Matthew, who's running our tech today, moves out with his twin sister, Mimi, and Rachel goes off to Australia to visit with her other brother, Andrew, who has a baby. My grandson, Godric, just in case anybody was asking.
Congratulations.
Thank you. And then Jessica runs off to Toronto, my youngest daughter, to be a bar wench at Moxie's. And have I missed anybody? I think I got Rachel, Andrew, yeah, I got them all 5 of my kids. So there we are, rattling around in a 7-bedroom house, thinking, well, out in Canada, maybe we don't want to pay $8,000 a year in property taxes anymore. So we moved to a place actually not far from here, on the water, on Ambleside, and we're inside the Greenbelt. And I can tell you, Scott, a lot of people my age, I'm 60, and there are a lot of people my age, believe it or not. Everybody here is being younger than me. A lot younger, but there are 2 rent curves in Ottawa. That I can tell you for sure. There's a rent curve inside the Greenbelt, and there's one outside, and they're very different. Property values outside the Greenbelt are going up between 1.5% and 2.5% a year, so they are increasing steadily. But inside the Greenbelt, land values are really taking off. House values, property values, commercial values. We're seeing 3.5%, 4.5%, 5.5%, 8% increases per annum. And that's what's driving that demand, and what Jawad and Scott DeVries and all these people are reacting to is that people want to live closer to services, close to a pub, close to a place to shop. Matthew and I went out to Barhaven to look for a client of ours who was looking to he runs a chain of pubs, wanted to put a pub into Barhaven. And Matthew and I went out, just to have a look around and get a feel for it. I mean, Barhaven, barbecue haven, what have you. Barhaven. We go out there, and there's a brand new subdivision, 3,000 homes. I live in Ottawa, 3,000 homes, block after block, mile after mile. Not one pub, not one place to get your clothes dry cleaned, not one corner store to pick up a liter of milk. I was flabbergasted that we're still building. Here we are in 2012. Suburbs where you can't even walk to a corner store. So I think most of your projects, Jawad, maybe all of them, are sort of reminiscent of that. They're downtown.
Yeah, we're all about urban centers. So going back to your question, I mean, that's one of the big factors. You've got a lot of people now that are doing a couple different things. Bruce talked about downsizing. People are getting out of those 3,000, 4,000, 5,000 square foot homes. They're downsizing. That's what's driving a lot. And they want to be connected. There's much more of a movement now towards being part of an urban community. And Toronto and Ottawa are great examples of cities that have great urban communities. So downsizing is part of it. The other big one, and Bruce can hit on this too, is affordability. And this is something we're seeing nationally. This is not a Toronto phenomenon. It's not an Ottawa phenomenon. It's national. Nationally, the
I think
average,
it's international, Jawad. I see it a lot in the United States now.
it is. It's huge, and we're seeing right now a huge disparity in affordability. In most, if you look at right across the country, the average median price difference between a low-rise, call that a single or a detached home or something like that, and a high-rise condo apartment is on average about $120,000. Condos are $120,000 cheaper than front door type properties.
Wow.
So when you're taking a look at where you want to be, whether you're upsizing or downsizing, whatever it is, that's a huge affordability thing.
Well, you know, one of my students, I was out in Vancouver at an Addiction Foundation function. It was a great function, by the way. And one of my former students, Jennifer Schwerz, who's living out there, she runs Urban Lens Photography. She was really proud she had bought a condo right downtown Vancouver, and you know, she's a young woman. And I said, why downtown? Why not, you know, a typical suburban house? And she said it was affordability, access, and I said, you could afford it? She said, yeah, I paid $300,000 for a brand new downtown, you know, condo. I said, wow, that's unbelievable, downtown Vancouver. How can you possibly do that? She said, well, I didn't tell you how big it is. And it was 400 square feet.
Yeah.
And she has a rule. You probably have heard this. You're a condo expert, but she has a rule. If she buys anything, you know, anything, she buys an iPad, she brings it home, she has to take something out. That's her rule. If I bring anything in to my 400 square feet, I have to take something out. So she's very careful about what she buys. But even so, in downtown Vancouver, where of course we hear about, you know, $1 million, $10 million properties, and of course much more. You know, even so, a student can still get a reasonably affordable condo downtown, access, entertainment, friends, culture. I mean, all of that.
Now, from a circle of life perspective, though, if we're looking at, you know, either downsizing or you're looking at, you know, sort of young people looking for condos in the downtown core, again, it goes back to I'm still somewhat scratching my head of where everyone is coming from. Like, is that because, you know, Bruce, you mentioned, you know, you left your 7-bedroom home, somebody bought it.
That's true.
Who moved in?
That's
where are
a
the
good
people?
question.
Like, you know what I mean? Like,
you've still got a lot of in-migration as well, Jimmy. Listen, as a country, we're still growing by almost 200 to a quarter million, 200,000 to a quarter million people every year.
They don't go to Toronto.
You know what? A chunk of them come to Toronto. A lot of them are still going out to the prairies. Ottawa still gets their fair share as well. And there's still a lot of draw coming into Ottawa. So we're looking at, you know, the major urban centers are growing, and they're really, you know, bleeding that away from some of the small towns. The small towns aren't growing as much anymore. People are kind of picking up roots and leaving and heading into the city centers, and that's got everything to do with access to healthcare, access to amenities, all those different kinds of things.
I like the pub thing.
The pub thing can be an important one too. So
well, we're Canadian. It's, you know.
Whatever. I mean, it happened on the drink.
We're culturally predisposed to all being alcoholics. We know that. That's
really okay. Well, having said that, we're going to go back to you, Scott, because I want to just sort of understand now. Okay, so we set the table for everybody when we started the show. Here I am. Okay, I got $1 million in cash sitting in my bank account. I'm getting 0.7%, or maybe I'm getting 1%, or even 1.7% on my money. It means I'm getting $17,000. If I get 1.7%, I'm doing better than Google does. I'm doing better than Apple does at 0.7. But, you know, I'm living on $17,000 a year. Now, that's just not going to cut the mustard. So I understand that there's a relationship here between DeVries, wealth management, and Fortress.
Yeah, I mean, when I first found out about Fortress, I actually, Jawad can attest to this. I basically, I must have spent 4 or 5 months getting to know Fortress, and I went back and forth because my initial thoughts when I was introduced to Fortress was, wow, they're yielding basically. They've got a product that is yielding on average for business models 8% a year.
8%.
8% a year, paid quarterly, with a deferred, what they refer to as deferred sale or deferred bonus of potentially another 12% on the back end. And that's subject to the meeting, the performance.
So if I had $1 million or even $100,000, I came to you, if I had $1 million, instead of getting $17,000 a year in income, is it interest income?
It is interest.
So instead of getting interest income of $17,000, I might get $80,000. Now, that can make a big difference to my lifestyle. But everybody asks, you don't get something for nothing, right? Is this a really risky investment? Is it over the top? Are we going to Vegas and putting it all on red?
Well, the thing about it is, and Jawad can probably comment on this, is that, as Jawad has always said, the security is a mortgage. And the very fact that, Bruce, you being in real estate, you can appreciate that having a security.
It's a syndicate mortgage?
Correct.
Okay.
Which means that ultimately is you've got some security in your investment. And
so really the risk is that the mortgage defaults, and then you have all the rights of a mortgage holder.
Correct. And a lot of us can understand when we bought our first mortgage or we bought our first house, what do? We probably put 15 or 20% down. Then we borrowed money from the bank. Banks usually were quite pleased to lend us the money because guess what?
What?
If we didn't make those payments, probably we might get a few nice letters, but ultimately,
not so nice
the bank
letters.
would come back and say, "I'd like my house back."
So the real issue though is, and I think maybe Scott Williams here mentioned it, is are we in danger of a bubble? Because we've seen what happened in the United States not that long ago, 2008, 2009. And, so, I mean, I'm okay with investing in mortgages. We do at Century 21 Explorer, where I work some of the time, we do lots of second mortgages. And, some of the entrepreneurs that I work with, they if you think, listeners might think, oh my gosh, you have to pay 12% on a second mortgage, or you have to pay even 15% on a second mortgage. But most entrepreneurs are making, 22% return on equity. Some of them are, of course, 30% on equity. So it's better to have some finance than no finance. Otherwise, you can't do your project, get your new business off the ground. But, Jawad, are we in danger in Canada with low interest rates of having a bubble?
It's a great question, Bruce, and it's one I get asked a lot. I actually spoke to a group of people about this yesterday as well.
Was that at the Rideau Club?
It was indeed.
Did you have a good meal?
I had a terrific meal.
Okay.
It was very, very lovely.
You'd go back?
I would go back again. So when you look at this whole question about a housing bubble, there's a lot of things you got to take a look at. What I tell most people is, start at the heart of the question. What is a bubble? A bubble is defined as when a housing market just appreciates at an inordinate rate. And that's where you see single year appreciations of 20 or 30%, or you see increases year over year over year of 10%. So it's either a huge spike in 1 year.
And was that what the United States was experiencing?
Absolutely.
Okay.
Or you're seeing several years of double digits run up compounding that make this huge, very rapid inflation for this metaphorical bubble. What's happening here in Canada is something very, very different. Yes, we've had a strong market. Yes, we've had a good market, call it a hot market even, but there are no double-digit, surges that we're seeing. I mean, the Ottawa numbers, your Ottawa realtors. I don't have to tell you about it. Toronto's best year was about 6 or 7%. So nowhere near this compounding 10 year after year, and certainly nowhere near a 20 or 30. Now, is there a little bit of ridiculousness in the market? Absolutely. And that is where I think we're going to see the soft landing kind of come up. I think those fringe projects, those, I want to call them frivolous, but those ones that are just outside of what's reasonable for Canadians to be buying are going to go. And I give that as the best example is all those projects, those boutique ones that are sprouting up everywhere, that are $1,000 a square foot, $1,200 a square foot.
I saw something on the Trump numbers in Toronto. They were, I don't remember what they were throwing. You would know.
Oh, they were $1,400, $1,500 a square foot.
Yeah, that's what I remember. Yeah.
And you know what? Those are international prices. Toronto is getting there. Vancouver is getting there. But we're not there yet. I mean, is there a market in Vancouver for $1,000 a foot? Yes, but it's pretty small, and the people that should be buying that stuff and can buy that have already bought.
Yeah.
So there's definitely some softness.
That goes to your point, Scott Williams, because who's buying all this stuff? Somebody has to backfill, right?
Yeah.
And so your projects that you're doing with Brad Lamb and others, they're not lower end, but they're not at the $1,000.
We're mid-market. We're affordable stuff. I mean, you're talking in Toronto anywhere from $500 to $600.
And what would it be in Ottawa in your projects here?
Ottawa's about $500 to $550 a square foot as well. And listen, Ottawa's got some very savvy people. Ottawa's got some very sophisticated people that are looking for some trendy product as well. Like that 1,000 square foot stuff. Like there's a couple neighborhoods in Vancouver that can support it. Our research doesn't show anywhere in Montreal
Do we have
or Ottawa.
$1,000 a square foot condos in Ottawa?
There's no, our research doesn't show any market.
Yeah, I wouldn't, my wife and I wouldn't be in that market.
No,
for sure.
and Toronto, I'll say.
Of course, Scott Williams, you might be.
In Toronto, I'll say
you're laughing? No?
Hey, I just bought my dream house like 3-4 weeks ago.
Well, tell us about it.
Good. I don't know, 4,000 square feet out in Canada.
Oh, okay, you're the Connecticut, but then again, you're a different stage of life.
Stittsville, actually.
Stittsville, okay. 4,000 square foot home in Stittsville, and you've got a family there.
Yeah.
Couple little kids.
Couple little kids.
And 4,000 square feet, is it big enough? Can you squeeze in together?
I hope so.
Yeah, well, the actual thinking, I guess, is the kids at one end and you and your wife at the other.
Exactly, yeah, we'll keep them
that never works.
So one of the questions I have for you guys when it comes to the investment side of things as well, and we talk about real estate bubbles and the like, is that we all know all too well the banking scenario in the U.S., and it's like when that bubble burst, I mean, it was the bubble that burst around the world, and there was a lot of different scenarios.
I think, Scott.
Absolutely, and it's, the ramifications of that are, yeah, you're right, they're still, resonating around the world, is that one of the things that, we continually hear, though, as well, is that Canada, we were talking earlier as far as we're poised for quote-unquote greatness over the next 10 years or so just because of the natural resources that we have, and it's, I think we've discovered ourselves as a country very much in the last 5 or 6 years as well.
Can I just interrupt for a second?
Just a sec. I just have this question, because the thing is that I'm wondering is that when we hear about the regulatory scenarios in Canada and being much more stringent than what we see around the world, is that something that also, is it a positive or negative effect within Canada creating this, we talk about not only just bubbles, but there's also this sort of insular effect that happens where it's, is it just for Canadians at this point, and from that side?
That's a phenomenal question, and the answer to that is yes. Canada's regulatory framework and our banking system saved us from ourselves, and it saved us from doing what everybody else did. So let's take a look at some of the key differences between the Canadian market and the U.S. market that created this bubble. There's a couple big ones that most people don't know. So when you go to buy a house in Canada, you've got to have a down payment, 20%. If you don't have a 20% down payment, you better have amazing credit, a good job history,
absolutely.
And you are going to have to take out insurance to protect the bank. Now, what's really interesting is you're going to pay this insurance premium, this CMHC insurance premium, but you're paying the insurance, but you're not the beneficiary. The bank is the beneficiary. Mm-hmm. So we don't do high ratio loans in Canada, and the high ratio loans are very hard to qualify for and carry insurance.
That's a very good point.
And unlike the U.S., we're not betting against ourselves.
Well, that's the big thing. Now, in the States,
what do you mean by that, Scott?
Well, if you look at the regulatory scenarios in the U.S. and what led to this bubble bursting, is that literally there were banks selling mortgages that were then in turn selling mortgages, and it's like the circle of life and that, so to speak, where people were actually hedging the bets against themselves.
Well, in fact, I get what you're getting at there, because some houses that will remain nameless were selling what they said were rated as AAA mortgages that they knew were going to default. Meanwhile, they're shorting them. So they're thinking that they're going to collapse while they're selling them to banks and pension funds and other institutions.
The European community.
Yeah, and not one not one banker who did that ended up in jail. And if you did that in your business, or I did that in my business, or any of us did it, if you did it, Jawad or Scott, we would end up in jail.
It's fraud. So that's a great point. So the first thing is Canada doesn't have those crazy high ratio loans. The ones we do offer are very hard to qualify for, and you've also got, this insurance as well. In the States, no such thing. There's no insurance on any of those mortgage loans or anything else like that. There's no insurance of any kind. Plus, anyone could qualify for it. The mortgage industry in the States was morally bankrupt. You had mortgage brokers that were giving $600,000 mortgage loans to people making $25,000 a year, just approve them for the loan, get it out the door, and everyone was happy to kind of keep the snout in the trough. That's the first big difference. Here's the second biggest one that people don't know. Scott, you just bought a house. Mm-hmm. You took a mortgage on that house. Mm-hmm. If you don't pay that mortgage, what happens?
There's going to be someone showing up at my door to escort me out of my house.
Exactly. And if they have to sell the property and they don't recover that money, you are liable for it. Mm-hmm. That's what's called a recourse loan. Mm-hmm. In the U.S., residential mortgages are non-recourse. it's non-recourse. So if you go in and it doesn't work out, you decide you're going to leave and it's not worth doing it, you go back, you flip the keys to somebody, and you walk away.
That's
so
a
again,
big difference.
You've got people that are borrowing money they shouldn't get that they're not responsible for. How anybody thought that was not going to be a problem makes absolutely no sense. So that's a big thing. Now the difference in the economy. Canada's economy is growing. The U.S. economy is flat, if not down, in all of its major markets as well. So when you take a look at fundamental regulatory differences between how you qualify, how you can qualify, versus the economics of the people that are making those purchases, those are two of the biggest differences between what happens.
And you make a good point, because, I mean, in the U.S. versus Canada as well, as much as, there are neighbors to the south, and we obviously deal with them every day from a business perspective. We have friends, we have family in the U.S., culturally speaking, we're, probably 98% the same. It's that 2% that counts, I guess. But if you look at it from a socioeconomic perspective, the U.S. is also very, very different in Canada. The gap between, we'll say that, even the rich and the middle class to the sort of the poor in the U.S., that gap is much larger than it is in Canada. I mean, Canada is primarily, if you look at it from an economic perspective, we have a very solid and very large middle class scenario, and that can be attributed to everything from universal health care and everything else that goes along with our culture and our society, the way that it's set up from a governmental perspective. But that must also greatly affect the real estate scenario in Canada, I'm assuming, because of such a large middle class and plus a much smaller overall population density in Canada as well. We're not dealing with such huge gaps. So
yeah, absolutely. No, and that makes a huge thing. Canada has a strong, a vibrant, and a growing middle class. And that's, again, got to do everything with that in-migration. I mean, listen, Canada's immigration has been capped around 200,000 to 250,000 people for almost 20 years. And there's been a lot of talk about increasing that. And when you take a look at those different waves of immigrants that have come, and there was, the big European wave in the 50s into the 60s, and you have the big wave in the 60s and 70s from South Asia, and now in the last 10, 15 years, a big wave from the Orient that's been coming. Those first couple waves that I mentioned, those were, middle class. The goal of those people was middle class. They were coming in somewhat middle class and looking to kind of move up from there. My parents were part of that big immigrant wave that came in then. The type of immigrant that's coming now, that comprises that 250,000 that's fighting to get to the door of Canada, is far, far different. They are coming in with wheelbarrows of cash. They are leaving economies, and they are leaving countries where there is no economic stability, there is poor political stability, there is literally topographical instability, and they are bringing their fortunes from their country and they're leaving. If you're a wealthy Syrian or an Egyptian, are you investing locally? Or do you want to go to some place like Canada? Remember, Canada ranked the best banking system 3 years in a row by the World Economic Forum, A++ rated by Moody's. Like, we are the beacon to the world. Now look at all this wave of immigrants that are coming in now, from the Orient, from South Asia, from Africa, from Eastern Europe. Here's what's fascinating. They're coming in, and 1 out of every 3 immigrants is buying real estate within 12 months of landing in Canada.
Wow, no way, really?
That's from the Canadian Real Estate Association. It's a powerful number. And people look at that and they say, well, why is that? And here's the answer. You're looking at people coming from those geographic regions where as little as 10, maybe 20 years ago, there was no local stock market. If you grew up and you were talking about the finance business and finance and people with wealth,
Mexico didn't even have a mortgage business until 15 years ago.
It was all real estate. Exactly.
It was all cash.
It was all cash.
Or nothing.
And those other places, there was no capital markets. It was real estate driven. It was real estate driven. And this whole idea of stock markets is be all, end all, altar, we should all worship that. I mean, that's been going on in North America for 100 years. We all remember, the Great Depression of 1929 and the Black Friday stock market crash there. And then, there was the crash of '89, then there was the Asian flu, then there was the dot bomb, and then there was the 2008. Like, it's just like really and the problem is, I'm not saying there's no place for capital markets. Capital markets make countries healthy. They diversify, but it's not for everyone. And we've been sold this message for the past 25 years that the capital markets are for everyone. They're for me, they're for you, they're for Joe Lunchbox, and it's going to take care of us. And, 20 years ago, most of us had never heard of a mutual fund. You walk into the bank and there's a mutual fund for mom, dad, the dog. There's one for everyone. You ask your banker, how do I diversify? They say you buy a bond fund, a balance fund, a growth fund, a Canadian fund, an income fund, a specialty fund, but it's all the same thing. Mm-hmm. So we've been sold this bill of goods that these products would take care of us, and they fundamentally don't. So, and that's something that immigrants coming to this country have no qualms about. They say, you know what, that's what we grew up with, real estate. And to sort of tie that point off, the problem with real estate in North America has been very, very hard to access. People say, well, that's great, Jawad, but you know what, for $10,000 or $20,000, I can buy a mutual fund and hold it by RSP. I can't buy real estate for $20,000. That doesn't work. And that's where Fortress Developments came up with the idea of getting Fortress Real Capital as a vehicle to give everyday Canadians the ability to access passive real estate.
Well, we did a study at the University of Ottawa a year and a half ago, and out of the top 100 richest Canadians, I can't remember the exact number, but I think it was about 54% of them made their money in real estate. So, and you know the story, what I told you the story last night, in fact, that in the greatest stock market boom in my lifetime, and probably the greatest stock market boom since the 19th century, the railroad, stock market boom of the, late 1800s or mid 1800s, when everybody thought, they were going to build railways to your house on the prairie. I gave my money to a major bank, to a private bank. I said they wanted me to invest with them. They said, we have great mutual funds. We'll take good care of you. And from 1995 to 2000, they turned my portfolio into an 8% overall loss. And if you had taken a dart and thrown it at the top 1,000 mutual funds, you would have done better. The private bank had, as it turns out, 4 of the bottom 10 out of the 1,000 worst performing mutual funds, and I was in all 4 of those. Okay. So, real estate, I tell my students, guys, is get rich slow. Sometimes when I was teaching and when I'm teaching, people say, Prof. Bruce, can you teach me how to get rich quick? And I go, I don't know how to do that. I mean, I don't think anybody really knows how to do that. Not really. But real estate, 54% of the 100 richest Canadians have most of their funds or the money in real estate. So I'm a big believer in real estate. Now, we have 2 student entrepreneurs with us here today. I'm going to turn to Siavash Naruzian from Empire Deck and Fence. So, Siavash, welcome.
Thank you so much. It's actually an honor to be with you, gentlemen.
It's great to have you here. Now, I've known you, Siavash, since you were a student in my class. How long ago was that?
2 years ago.
It's only 2 years. It seems longer, right?
Great class.
Well, thank you. I like it when you say things like that. So, Siavash, you're really part of our family now, and I know you started Empire Deck and Fence, and you have a new project called Daffy Deck. So first talk a little bit about Empire Deck and Fence, and then your new project, DaffyDeck.com.
So I saw the real estate starts in Ottawa, and I saw these new houses being built. So being an entrepreneur, I want to hit the market, and I had one simple marketing tactic, and I was just knocking on doors. So that's how I started my company. I just started knocking on doors in new subdivisions and offering residential construction services. Out of eave shop installation, AC installation, interlock, and decks and fences. Decks and fences was the least capital intensive to start.
Right. So
we started with that. It started being a good business. We grew it from $7,500 in sales to over $300,000 in sales in 2 years.
And you were still a full-time student?
Yeah. I just graduated from engineering at the University of Ottawa.
So Scott DeVries, did you make $300,000 a year when you were a student?
I did not.
I did not either. I seem to remember making $1.50 an hour. So that's amazing, Siavash.
And I think a lot of it it's fun. It's like I love building companies, and I look at people like Jawad and what they've accomplished, and I really look up to people like that and how they've been able to do what they've done in business.
It's amazing what you've done.
He's being a little modest, so he should tell us the first first deck you ever built, and a typical entrepreneur, you should
tell
us
about the
that
first
story.
deck. Sure, that was Matthew Firestone, no relation actually. My youngest son here with me today. So keep going, Jawad.
So we started. So I saw the market. I started knocking on doors, and the first step is you need a lead. Right? So we generated a lead. Someone said, yeah, you know what? We want a deck. Come back and give us an estimate. I'm like, sure, but I didn't know how to build a deck, right?
You didn't actually know how to do it?
No, but Home Depot told me they could help, right? So I went to Home Depot and I told them, can you teach me how to build a deck? And the guy at ProDesk says, man, you don't know how to use a saw, like, you know, like, we can't help you here. And I'm like, I look at the guy, I'm like, how much you get paid, right? So I'm used to taking baseball. I'm like, come outside, and then he comes outside, he starts having a cigarette. I'm like, man, what if I just pay you twice as much as you get paid here? So he said, yeah, sure, okay, let's go, right? You got a 2 times base salary. So we went on, and he's in Home Depot, and it sucks in there, and he gets to be outside, and he gets to build decks. It's a great opportunity for him. So we put one and one together, and then we built a deck at half market value, and we still made 50% profit, and the guy there, he got the salary. So I'm a big believer in taking resources, putting them together, and creating substantial value for everyone.
Well, that's amazing. Now you've got a new project. Tell us about DaffyDeck.com.
So Daffy Deck is a theme park development company. So believe it or not, I'm 24 years old, and I get to sit across the table from Bruce Firestone, one of the most creative real estate developers that I know.
I love it when people love it. Keep going.
And he comes up and he says, well, like, the water park industry has one major problem. It's just like when there's a bit of overcast, people don't go. And sometimes the kids want to go, but the parents don't want to wear a bathing suit and stand in line for 40 minutes. And you don't want to stand in line for 40 minutes to gain a couple pounds. Like, but the kids want to go, and you feel bad. So Daffy Deck aims to solve the water park industry's problem due to temperature effects and just by providing dry rides. And what dry rides are, low capital cost rides where people get to go and interact. So we got hedge mazes out there, we got stages, we got bumper cars, we got kiddie cars, we got mini golf. And you really don't see that in the water park industry. In the water park industry, you see a lot of $10 million rides, you see some basic site works and retail, but you never see any middle class of rides, and that's what we're trying to do in the water park industry. We're trying
it's really plug and play, right?
It's a plug and play, and we were able to find architects in Los Angeles. We hired some in India, and they referred us to some in LA, and then we found some great architects that believe in us. So they were able to, they give us a great deal.
It's a fantastic project. I really look forward to seeing Daffy Decks, around the world. And, it's really exciting. Now, we also have with us another student entrepreneur, still at the Telfer School of Management at the University of Ottawa, Matthew Firestone. Now, Matthew, you and your partner, Abar Mayant, are going to build some industrial condos out in Hawthorne, and you're also repping some out on Michael Copeland Drive. So tell the listeners, in 2 or 3 minutes about what you're doing.
Well, so we've got our project on Hawthorne. I'll start with that one. Basically, I've been working on it now for probably a year or so, and we were looking at the auto market, and I really wanted to get into the development game. It's a game I know. I've been a real estate agent now for 5 years, almost 5.5 now. So I know the business, and I was looking at the markets, and I was thinking, what market can I go into for development that it builds condos? Well, I'm not going to build a $60 million condo off the bat. I have no experience.
Is this a residential condo?
No, they're industrial warehouses. So they're 1,250 square foot warehouses. So I was looking at the markets, and the one that jumped out was the industrial market.
Right.
We're realtors. We sell these all the time. They sell very quickly, and investors love them. They're great cap rates. Owner occupiers love them, but they can't find any, and so they got to lease. So it really made sense to go into this market. We looked at the office condo market, but there's a couple guys already out there building those.
Yeah, they do a nice job.
And they do, yeah. Dave Spillenard at Springfest just built some out on Hunt Club, and they're beautiful. $300 a foot he's selling them for. We're selling ours for $195 a foot. They're 1,250 square feet. You get 32 feet clear ceiling height. They're really great condos. And so we got into that, and we're just in the process now of getting all our site plans ready, and we'll go to the city. The other ones we've got is Regional Realty is going to build some more office-style condos, but can be used as industrial warehouses as well, out on Michael Copeland Drive in Canada. Those are a little smaller. They're 800 square feet, 26-foot clear height, and they're going to be real nice condos too. Again, more office-oriented. Get dental clinics in there, whereas ours on Hawthorne, you're going to get cabinet makers, you're going to get welders. We have a trampoline school who's interested in going in there.
Right. Because of the ceiling height, I guess.
Well, yeah, they're in a building now in
They told me, yeah, our parents are getting really worried because the guys are jumping on the trampolines and the kids are sticking stuff on the roof, and the parents are seeing that their kids' heads are literally 6 inches away.
Yeah, that is scary. So it's an exciting time for young entrepreneurs. You know, we hear a lot about tech entrepreneurs in Ottawa, and you know, at exploring.org, where I'm the executive director, we have lots of tech entrepreneurs, but we also have people who are, you know, running restaurant chains, people like you, Matthew, who are building industrial condos, people like you, Sivash, who I expect will just be, by the time you're 35, Daffy Deck and Empire Deck. I mean, Empire Deck will live up to its name. It'll be an empire.
Oh, yeah, we're going to crush the competition.
All right. So I have to, you bet, crush the competition. That's the spirit. So I have to say to everybody, I'm going to change the topics here a little bit. I have to say both to Scott DeVries and to Jawad Rathore, Scott from DeVries Wealth Management and Jawad from Fortress, I have to especially thank them because, as I mentioned to listeners a moment ago, I'm the executive director of exploring.org, and tonight is a special night for exploring.org. We are putting on a show at the National Gallery of Canada. It begins at 6 o'clock with registration. At 6:30, we're going to serve everybody a meal. At 7:15 or so, there's a world premiere of a film called Quantum Entity, Q Edition. After that, there's a bunch of people, we call them Brevis Gallery artists, who will be on display. And, of course, there's one novel that will be officially launched tonight, and that's the one that I wrote, the first book of my trilogy, Quantum Entity, We're All One. So it's a big night, but I wanted to say, especially to you, Scott DeVries, and to you, Jawad Rathore, a big thank you, because you guys stepped up as sponsors, not only for this show, the Firestone Williams Report, but also the sponsors for Artifacts. And Jawad, you will be on stage, and Scott, you as well tonight. We get to thank you, and you get to, you know, introduce yourself to the 400 people that will be at the National Gallery at this special event. So I really wanted to make sure that I had a moment to thank you both.
No, it's very, very kind of you. We're thrilled to be invited and be a part of this as well. We're excited to be in Ottawa. We're excited to be involved in the Ottawa community, and you know, for us, when we heard the message behind what Exploring was all about, it really resonated with us because I think we're all here. We're all trying to, you know, make this great, you know, country of ours better. And the only way we can do that is by being innovative. And innovation, you know, comes from entrepreneurs. It comes at grassroots levels, you know, which I think is huge. I mean, I got started in business when I was 20 years old, right out of university. I door knocked, I cold called, I did all those kinds of things. I heard no so often. I thought it was my name. But I think it's you know, that innovation that really drives things. And what got us excited about, you know, the message and the artpreneur you know, concept, which I think is fantastic, is, you know, I think, you know, to solve some of the big problems that are out there. There are some big problems right now. We need innovation. We need fresh thinking. We need creativity. Well, is there any arena that embodies creativity better than the arts? It's literally an industry that is only about creativity. So if we can find a functional hybrid between the creativity of innovation and art and the skills for value-driven deliverables like an entrepreneur, I think those are the building blocks of what we can incubate now and really reap the benefits from the future.
Well, I can tell you that Exploring has, you know, a wonderful sponsor group that have really helped us with events like our Dalby Trade Show, our Bootstrap Awards, and later on this year, the K-Loss Tech Showcase. But, you know, when I talked to many of them about Artifacts, which was named by Scott Williams here on my right, a great name, by the way. When I talked to them about Artifacts, they said, well, you know, we're really not going to do anything with the arts. Arts is, you know, kind of soft around the edges. We're not going to support that. But come back to us for the Tech Showcase in November when we do that, which is great. But, you know, I would say to some people, you know, well, you know, the artpreneur is really important to building a more interesting, more diverse, and more sustainable community, because you can't outsource creativity to China or India. You cannot. And I would say to them, you know, look at that, nice suit you're wearing, or do you like to listen to music? They say, oh, yeah, I got some great tunes on my iPod. You know, somebody had to make that music. Do you like to read books? Oh, yeah, when I go on holidays, I always pick up a book or two. Somebody had to write that. You know, so artpreneurs to me aren't just, you know, visual artists, although that's a big part of it, or sculptors, but they're designers. They're people who design games, video games. You like to play video games. Somebody had to, talking to Scott Williams here, somebody had to design that. These artpreneurs are incredibly important. Creativity and innovation, as you said, Jawad, is important. But I got a lot of no's. I mean, I didn't confuse no with my name, but 3 weeks ago I was incredibly disappointed, and yet people like Jawad, Rathore, and Scott DeVries and others have really come to the party. We had as of 8:30 this morning, we had a complete sellout for tonight, and Scott Williams here on my right set us a goal. He said, you've got to get 70 sponsors. 3 weeks ago we were at 40. We had half the tickets sold, 200 and not 400, so we've managed to push that ball up the hill and down the other side. And I have to give a lot of credit to the young people at exploring.org, Erica Godwin, who's the young manager there, Teresa Schultes, Assistant Manager Alex Wolf, who's our summer intern, Matthew Firestone, and of course Jawad Naruzian, who's also here. So I'm very grateful. But I want to also then turn to the guy on my right here, Scott Williams, who named Artifacts, and tell us how do you see this event? How did you get that name, and how did you get involved with it?
Well, the name was simple, actually. That was just us looking at a Latin dictionary. I think the thing that was important for me with Artifacts, and I think this is the important message behind it, is that I think a lot of the times people, when they look at the arts, they immediately think of, as you said, painters, sculptors, perhaps musicians, those type of things. And I think the important thing with Artifacts and what has been done now is that, seeing that the artists that are involved, it goes far beyond, I think, what people think of the traditional quote-unquote arts, right? Like, you and I even had a conversation last week, is being an architect not a form of art? Is being a movie maker
who did the film that we're going to see tonight, Quantum Entity Q Edition? It was an architect, a hacker, an artist, Janet Golford, at prototyped.org.
Exactly, and it's when you look at that type of quote-unquote art, yes, he has made an incredibly amazing movie that goes along with your new novel, but at the same time, I think you have to think of what are the ramifications of that talent as it's applied to the world at large, right? Is that that can be applied for so many different aspects of every business. When you look at anything from clothing designers to artists like Janik to all of those different types of art, is that it's not just about putting something up on a wall and looking at it for that that aesthetic purpose. It's about again, it goes back to that entrepreneurial spirit and going back to adding value to businesses across the board when it comes to things like new technology, which is what truly does drive business forward.
Well, I have to say I am particularly grateful to all the people in this room, really, who came to the rescue of Artifacts. Scott Williams, without your positioning of Artifacts, the phenomenal surge of support that we've seen over the last few weeks would not have happened. Now, just quickly, we've got 2 minutes left. Is that right, Matthew? 2 minutes left. I would like to go to Scott DeVries again. Scott, if people want to learn more about DeVries Wealth Management and how to get involved in real estate and investing in 8% or even 12% returns, how do they get in touch with you?
Well, all they have to do is simply either give us a call.
You want to give the number out?
Yeah, that's 613-226-9888.
Say it again a little louder.
613-226-9888.
Perfect. Call me now.
And we can certainly provide some information.
Yeah.
We have wonderful dinners every month that we host with Jawad.
Yeah.
And, it's just a great opportunity to find out about this. Again, it's Fortress provides an opportunity for many people whereby they can help stabilize their portfolio. And I think for them, that's just a refreshing thing in this environment.
Fantastic. Now, Matthew, how do people get in touch with you to learn about your now?
You can go to www.apex.co.com or www.autorealestatenews.com, and I'm all over those two websites.
All right, and Jawad, how do they get in touch with Empire?
Check out our website, empiredeckandfence.com, and you'll see the deck galleries.
All right, that's super. And we'll see Daffy Deck soon, I hope. Now, Jawad, how do people find out more about Fortress? How do they get more involved with you and the developer group that you represent?
Yeah, so at Fortress Strategic Developments, if there are developers and builders out there that are looking to see if there could be a fit with Fortress as a financial partner and as a development partner, they can contact us. They can reach us at connect@fortressrealcapital.com. If they want to email us locally at 905-787-9266 to connect with us on the development side of things.
That's good. We're done.